Good morning, everyone. Welcome to another episode of the Mizuho Week Ahead. I'm Jingwen, market economist at Mizuho Bank. This week's theme is Progress, Preemptive, Presumptions. The lack of progress on the US-Iran negotiations is increasingly weighing on sentiments, with worrying implications on the duration of the blockade in the Strait of Hormuz. Despite this, US equities advanced to all-time highs on Friday, as markets priced in both Iran peace talk hopes over the weekend and blowout earnings from Intel Corp. Meanwhile, Kevin Warsh's nomination hearing revealed little on his policy inclinations, aside from espousing requisite central bank independence mantra essential for its confirmation. On Friday, the DOJ dropped its criminal probe into Fed Chair Jerome Powell, clearing the path for Warsh's confirmation, with Senator Tillis lifting his blockade, and the Senate Banking Committee scheduled to vote on his nomination on 29 April. That optimism has been tested on multiple fronts over the weekend. Trump cancelled the planned envoy trip to Pakistan on Saturday, while Iran president reaffirmed that Iran will not negotiate under blockade or threat, keeping the ceasefire fragile and oil prices sticky above US 105 per barrel. The extended ceasefire between Israel and Lebanon was also violated over the weekend. Israel PM Netanyahu has pledged to vigorously target Hezbollah with reported strikes on multiple locations, while there continues to be clashes between both parties in southern Lebanon. A shooting incident outside the White House Correspondents' Association dinner also added a further layer of political instability. That said, the latest news of Iran offering US a new proposal to reopen the Strait of Hormuz could continue to support the optimism from last week. In Asia, as we have flagged, the BSP hiked policy rates by 25 pips on grounds of deterioration in the inflation outlook, which requires timely and preemptive action. The BSP appears to have undertaken a hawkish turn in signaling that a 50 pips hike is on the table. Nonetheless, the underperforming peso, which exacerbates inflation woes, is also a key factor under the monetary policy calculus. In contrast, Bank Indonesia held rates as expected, while emphasis was on their willingness to persist with intervention efforts to stabilize the rupiah. That said, the rupiah will find increasingly hard to shake off depreciation pressures as oil prices remain elevated and weigh on the fiscal subsidy bill. Looking ahead, the ECB will be making little presumptions about the growth and inflation impact from the ongoing war in the Middle East, especially with its supply chain disruptions being far more acute than most other regions, considering their geographical proximity. Accordingly, we expect them to stand pat and signal potential vigilance to retain optionality of policy tightening in mid-2026. Similarly, the Fed is unlikely to jump the gun, as it is too early to conclude whether inflationary risks or adverse demand shocks will prevail. Even as we expect them to stand pat, a hawkish hold is most likely amid strong jobs print and pipeline price pressures. In Asia, the BoJ will also have little clarity on inflation and growth risks. The BoJ cannot afford to hike too soon and risk destroying healthy reflation. In any case, consequent yen volatility is best addressed outside of rate hikes, given that interest rates have proven to have little efficacy in propping up the yen. The Bank of Thailand is expected to stand pat as domestic demand remains fragile and the impending exit from deflation remains supply-side driven. Furthermore, the Middle East conflict dampens prospects of recovery in the tourism sector, which warrants caution against preemptive tightening. All in, markets will have to figure out how to manage risk given the lack of progress on the geopolitical front, especially as central banks contemplate the balance between being preemptive and making no presumptions, resulting in behind-the-curve risk. For the week ahead, market will continue to be focused on the US-Iran conflict. EM AsiaFX will start the week on the back foot as energy vulnerabilities take center stage. For more information, please refer to our Week Ahead publication or contact your respective sales desk and RMs. And for regular notifications on our market views, please subscribe to our channel and hit the notification button. Thank you.